Good afternoon, traders and investors. Will back here with another one, coming to it a Sunday video, guys. And it's that time of the week again where we go over the top 5 options plays for the upcoming week. Hopefully you guys had a very nice weekend so far. Now keep in mind, all the options in today's video are going to be for selling options, more specifically for selling put options as part of the larger wheel strategy that I like to run on the channel. It's the strategy that I use for my bread and butter. It's the one in which I deploy the most amount of capital and the one in which provides me the most amount of gains on a weekly basis. There's 3 reasons why I really love selling puts in the open market. One is it's a very easy strategy to understand and to manage. It is also very scalable, whether you have a small account, a medium account, or a big account. Another reason is that it's very passive. It requires a lot of, or rather low time management, all things considered, guys. You do not have to sit in front of charts for 8 hours a day to make this strategy work. It requires a very minimal amount of time, provided that you do a little bit of homework before the week, such as in these videos. And lastly, it's a strategy that provides a very high win rate overall. 95% of the time, we just get to put the premium in our pockets and move on to the next trade. And in the event we get assigned, well, we just end up buying shares of the companies that we love the most. You can think of selling puts in the market, guys, just as buy limit orders that simply pay you. So in today's video, we got a few things to discuss. 3 things to be specific. Number 1, we're going to be going over the expectations for the week. Do we have any things to possibly consider for the upcoming week in terms of macro, in terms of news headlines as well, or in terms of company earnings? And then, of course, take a look at the technical analysis. How are the charts shaping up? Are we still possibly rocketing to the all-time highs, or might we be due for a little bit of a pullback? As we've seen in the last 2 weeks, momentum has pretty much stalled on the SPY and the QQQs alike. Thereafter, guys, we're going to get into the strategy rules. I'll be going over the strategy rules very briefly for about 2-3 minutes. And then, of course, we get into the top 5 options plays, followed by about 10 bonus plays. I always got some bonus plays for you guys, so make sure you stick around to the end of the video for those. If ever you want to navigate to those 3 different sections, feel free to use the links down below in the description for the timestamps. So without further ado, let's jump right into the action. And we're going to start it off with the week preview, right? So what do we have in terms of macro this week? Well, we got a big day on Wednesday, that's for sure. We get the CPI. That's going to be one that will definitely move the markets. Thereafter, on the Thursday session, producer inflation as well. And we know that amongst the tariff narratives, there are many, of course, right now. Inflation is front and center as a major concern, and any uptick in CPI or PPI could just go to accentuate that tariff fear or uncertainty overall. This is going to be the biggest day of the markets on the Wednesday, followed by the Thursday session. And then on Friday, we get the good old Michigan Consumer Sentiment Survey. How are consumers feeling? Are they as bearish as a month ago? This could be one to watch for the movements of the market as well. In terms of earnings, well, we don't have that many large earnings this week, but a few that could be notable to us for their own respective sectors will be CrowdStrike in relation to any and all cybersecurity plays that you guys might be interested in doing. And then on the Friday session, we have another big one in terms of semiconductors. AVGO, Broadcom reporting. They're going to probably move the markets a decent amount, kind of like NVIDIA, not probably quite as much as NVIDIA in terms of sentiment, but definitely one to look out for there as well. But suffice to say, we are at the tail end of this earnings season, so those will be your 2 biggest market movers for the week specifically. In terms of the news headlines that we got to look out for, well, tomorrow on the Monday session, we may be due for a slight little kickback to the red side with President Trump on the Friday session, late into the session after the close, as a matter of fact, potentially, well, not potentially, actually doubling the steel and aluminum tariffs to 50%, and the EU prepared to impose countermeasures. We know that we got several headlines with the European Union last week, to where Trump was saying he wanted to do 50% across the board in terms of the European Union for tariffs because the negotiations were not moving fast enough for his liking. Then the EU came to the table with him over the course of last week and said, no, we're going to come to talk, just give us some time. So the deadline was extended to about the mid-July point. This headline right here will probably be resulting in some market action on the Monday session. So if we end up with a red Monday morning, it's going to be a very nice opportunity, in my humble opinion, to go shopping for the short puts that I'm about to present to you guys in a few short minutes. And that leaves us with the technical analysis for the week. Where do we currently currently stand? Well, before we get into the charts, it's important to realize, guys, that for the last 2 weeks, we really haven't moved, haven't cracked any levels to the upside, nor have we cracked any levels to the downside. That is true on the SPY, but it is also true on the tech sector as well, trapped between overhead resistance and below support. But one thing I do want to bring your attention to, guys, is the breadth indicators. You can see the percentage of stocks above their 50-day EMAs are not clipping into the highs. You can clearly see that momentum has tapered back. Now, if I pull this back onto the 20 years of historical data, we are literally right in the middle. So not much in terms of short-term momentum. That can quickly change, but short-term momentum has shown on the 20-day that it has been pretty much net selling in terms of rotation to the downside. Percentage of stocks above their 50-day EMA also at 64%, not clipping into the highs. So you can clearly see that there's been a bit of a lack of momentum, bit of a lack of follow through towards the all-time high levels on several major indexes overall. And the percentage of stocks above their 200-day EMAs, it is still only at 40%. So we've had some very nice rallies over the past 4 or 5 weeks, but just letting you guys know, we're really not as bullish as some people might have you believe, to where we could be in a market environment where a lot of stocks, such as in 2024 or sometimes in 2023, we're really all powering through, right? Now it's just a few names that seem to get a bit of momentum every few days, and then momentum kind of vanishes off and the money kind of rotates from sector to sector, but nothing is truly getting some phenomenal lift overall. And you can see that by the longer term EMAs down here at about 40%. So suffice to say, a bit of a lack of momentum follow through to the upside right now, but we know that any macro data changes or potentially more trade deals that are brought on the table in the near term future could just bump us up a little bit of a level here on the SPY. And all things considered, guys, the time frames that make the most sense to me are the weeklies. The weekly bulls are still largely in control of this. If we were to pull back, it would be a healthy pullback into a very large area of support on the SPY. Well, the first one we're already into, right? 585 down to 575. But if we drop one level, they still have a ton of room, could come down into the lower EMAs, and that bigger area of support, in my opinion, would be 565 down to 550 on the SPY. And on the Qs, that would result to, if we clip below the first level, let's say this week or the next week, 510 down to 501 is pretty much your first line of defense. The bigger line of defense for me would be down here about 490 down to about 470, that 20-point range, whereby the bulls will just be looking for a weekly higher low for possible further trend continuation. So what I'm trying to say here essentially is, go slow, right? If we're looking to sell puts under the market, right, we can't be fully relying on this short-term area because we know momentum is a little bit weak. The bulls might be getting a little bit tired here. We know we have tariff and headline fatigue as well. So any negative headlines this week, either from the tariffs or from some of your inflation key readings, right, that may be a catalyst to send us further to the downside. If we get some positive trade deals and whatnot, and inflation is good, that might be the one thing that leads you to the upside. But we're still not in a position that we can blindly trust this market and sell puts super close to the market and go all in and think that everything is fine. The skies are just blue. There's no clouds whatsoever, right? So be very cautious still, be very calculated, and be very selective with the companies that you choose to run this strategy on. That is your market preview for the upcoming week. Hopefully you guys enjoyed that. Now let's dive into some of the strategy rules. So I used to do these rules, guys, for about 10 minutes each, but now I'm just going to give you guys the rules. Take some screenshots, right? I'll be giving you 2 strategies. One is the bull market strategy. That is this one right here. Take a screenshot for the full strategy. I'll leave 2 links down below in the video description. They're about 10 minutes each, not too long, but I go through each and every one of these lines individually with a lot more detail than I'm about to do right now. Matter of fact, today we're not going to do any of them. Well, go through them, right? Because I'll give you this one, that's the bull market, take a screenshot. I'll give you the bear market one. This is the bear market wheel strategy, take a screenshot of that. The main differences between the bull and the bear is the targeted ROI that you're going for. The bear market strategy is a bit more conservative and the bull market is a bit more aggressive. Neither of them are very aggressive at all. As a matter of fact, the bull market strategy is still fairly conservative. If you ask me which one am I playing, well, I'll have to explain to you. It's a hybrid of both right now. now. On some stocks that I have higher conviction on, some things like Amazon, I'll play a little bit closer to the bull market strategy criteria. Some other stocks that I still do want to play, but that I don't fully trust and that I want to give myself some good distance, I'll be employing the bear market strategy. So for me, it's really going to be stock specific, right? I'll look at all opportunities and then I'll classify them into which one of these two strategies that I want to run. As I've said, I'm not truly convinced that the market is ready to just blast through all-time highs, go on a ridiculous tear because the skies are blue and there's no concerns whatsoever, right? There's still a lot of uncertainty on the table, still a lot of possible negative macro catalysts that we have to look out for in the next 30 to 60 days. So do not get too greedy and do not get too complacent overall. The gist of everything, guys, in terms of the both strategies, it's very simple, right? If you want a 2-second rundown, very simple. Look for stocks in weekly support. They need to be high conviction stocks as well. Don't get too greedy overall on your strikes. And as something last, right, that you want to do, just always be looking, guys, for stocks that have very solid fundamentals. Other than that, take screenshots of the rules. Those are going to be your rules. 2 links in the video description, bull market and bear market. Go through each one of these lines in detail, yeah? And the last one is you always want to be writing below the expected move. If you guys, it's on these 2 lists. If you guys don't know where the expected move is, easy, guys, for free. Go to barchart.com, type it into Google, bar chart, expected move, then whatever stock you want to look at. Bar chart, expected move, Amazon. Bar chart, expected move, NVIDIA. Whatever you want to look at, it'll give you the expected move for the week. When you're looking to write puts under the market, try to always be below the expected move to put most odds in your favor of not being assigned. And with all of that being said, let us dive right into the top 5 options plays immediately, guys. So let's move into option number 1. And you will see that several of these have been recurring for the last 3-4 weeks. Is that because I'm running out of plays? No, it's because these same plays are still as high conviction as they were a few weeks ago, and they're all still in the same levels. And that should be fairly obvious because most of the stocks have not moved in the last 2-3 weeks if we look at the SPY and the QQQ. So option number 1, again, is going to be Amazon. I don't know how many times I've played Amazon in this lower bound right here. I will continue to play it if it keeps offering the opportunities. So Amazon, the reason that I like it is very simple. You have a very big support level coming below us here, which starts roughly in the mid 190s and goes all the way down to about 180. That being said as well, it's one of my favorite companies in terms of the fundamental expansion of the business in the next 3, 6, 9, 12, 18 months overall. And at the end of the day, we all also have a very nice structure looking for a weekly higher low and possibly going for the further trend continuation, right? So if Amazon pulls back, I would love to be able to write short puts under the market, but also if it assigns me, I do not mind buying shares here, as I do believe this will be the fallback area for the bulls before possibly another run. So I want to play Amazon in the mid to low 190s. That being said, Amazon expected move for the week is 199.55. So let us pull up the options chain and see which one of the 2 strategies can we use possibly for Amazon. So let's pull up the options chain right here. And what we're going to be looking for the bull market strategy, if you guys took notes and watched the videos down below, of course, we're going to be looking for 0.5%. What does that mean, guys? We're looking for 0.5% on our capital per week. 0.5% every single week is about 26% per year. No compounding included in that calculation. So in all reality, if you're compounding your money, it's closer to like 30, 35. That's not bad for an annualized ROI, regardless of the size of your account, right? The 0.5% rule, how you find it, it's very easy. Divide the strike price by 2. So 200 divided by 2 is 100, and then you're looking for that in cent or dollar increments. So half of 200 would be 100. So you're looking for $1 on the bid. As you can see, this one is a little bit too high right there, too juicy, too aggressive. Down here at the 197.5, that is pretty much almost 0.5%. So your bull market strategy would come right into there. Bear market, just divide this number by 2, and then you have the bear market strategy. So the 2 strikes that will interest me, depending on how aggressive or conservative I want to be, is the 197.5 or the 195s. That is right in line with where I want to be at the lower end of the start of the support area and is well below the expected move. The best case scenario is Amazon has a red date to start off the week on Monday, and then, well, you may even get some better premium on the 197s or maybe even some better ones on the 195s. Be dynamic with your strike prices. If Amazon, for some which reason, has a 3 or 4% decline on Monday morning, are you just going to stay? Are you just going to sit at the 197.5s because I said those were the strikes? No, the premium will probably be too high. You will step down your strikes at that point, maybe to the 195s, to the 192.50s, or who knows, maybe even the 190s could be offering something decent. But as a first glance right now, if the price stays the same, these are the two strikes that I like. But obviously, I want to go as deep as possible on this chain to make sure that if I do get a sign, I'm getting the best possible price and as deep as possible into the start of the support area. That is stock number one, and that is Amazon. Stock number two is going to be Google. Same concept. Google's been on this list now for God knows how many weeks running in a row. And the reasons are very simple. Support area below us, 170 down to 161. So you want to be as deep as possible into there. That's the daily. All the daily EMAs are sitting there as well. And on the weekly timeframes too, you can see it's a very big support area. And all of this congestion at the lower 160s should provide a good backstop for the bulls in the event that the markets do choose to consolidate a little bit more. Couple that with very solid fundamentals for the company. Company's trading very cheap right now at about an 18 forward price to earnings, a forward price to forward PEG ratio of 1.21, and a fairly decent free cash flow yield. And you end up with a very decent opportunity where the technicals line up with the fundamentals also being somewhat cheap. So the expected move for Amazon on this week is 168.5. Let's go shopping on the chain and see where can we find below 168.5 if we want to be the most efficient that we can be on Google. So let's pull up the chain real quick, and I'll show you guys what I'll be looking for. So we know the expected move is, all the way down there at roughly, let's call it 168.50. So we can see right here, the 167.5, half of 160-ish is about 80 cents for the 0.5% rule. So you'll see, as a matter of fact, we're actually getting 0.5% on that 167.5. Quite decent. Where's the bear market one? We'll cut this number in half and you end up with a 0.25% per week, which would be the 165s. Now be dynamic with your strikes, guys. If Google opens up 2-3% negative on the Monday morning because of the steel and aluminum tariff news, well, you guys know the drill, right? These strikes will probably be stepped down. You'll probably find 81 if Google drops, right? You'll find this 81 cents, maybe at the 165s. Who knows? Maybe even at the 162s. Go as deep as you possibly can while still getting the adequate ROI for the trade. So if you ask me for my preferred strikes on Google this week, it'll be 167 down to 160, as deep as I can possibly go while still getting decently paid for it. That's stock number two for Google. Stock number three is going to be Micron, but I'll give you two other ones included in this one, two other semiconductor plays. Now, of course, we know that AVGO Broadcom has earnings on the Thursday session, and this does stand to move the market. So we should be fairly conservative on the strikes that we choose this week if we want to play semiconductors, because we know there's a few events. There's CPI, and there's also the AVGO earnings on Thursday after the close. So if we are choosing to write Micron, we have to want to respect our rules and really get in the support designated area. That being said, Micron is coming into resistance right now. Below support is 86 down to 80. So of course, I want to be playing the lower 80 bound. It's been a very nice area of support all the way since the month of August, and that green line right there is the 200 weekly moving average. If you couple that with the fact that Micron has very nice expansion of its own fundamentals, and that in or around the lower $80 range, the forward price to earnings, guys, is like at 12.13. I did it at 70, but it's not so much more expensive at 80 than that. Forward PEG is very cheap. Forward price to sales is ridiculous. This is one of the cheapest companies in around the $80 range, if you can find it there, in all of semiconductors. So for all those reasons, I do enjoy Micron. The expected move for the week is 90.54. 90.4. Let's go shopping on the chain and see what can we possibly find on Micron below 90.5, right? Or 90.4 rather. Well, let's pull up the options chain right here for the Friday at the close, and you will see that we can get pretty deep because this one has some pretty good implied volatility. Matter of fact, if you look for the 0.5% rule, it would come in right about here. Half of the 80 range is roughly about 40, 45 cents, depending how hard you are. So it's between the 87s and the 88s. Both are below the expected move of roughly 90.5. If you wanted to go for the bear market strategy, you'd be down here at 85. However, if Micron opens up the week red, going down 2-3%, well, you may be even able to find lower strikes than that. So at a first glance, the strikes that I like are the high 80s, such as 88, 87. But if we open up red, who knows? Maybe I can find this exact same premium at lower strikes, 86, 85. And for the bear market ones, those may be down to 84, 83. So my range for this week on Micron, let's call it 87 all the way down to 82, as deep as I can possibly get, while still getting compensated for that capital. And that is the big start of the support range, exactly the area in which I want to be playing Micron. Now, special shout out to AMD. I'm not going to be giving you guys the expected moves, but I will be giving you where I would be interested for other semiconductor plays, right? If you don't like Micron, AMD 100 or below, pretty big fan. Fundamentals are good and nice support area. And NVIDIA as well, who just reported their earnings that I like a lot. If we get a little bit of pull to the downside on NVIDIA and I can find some strikes down here under 120 to 115, that would be an area that I would enjoy on NVIDIA as well. But as of right now, Micron stands as my number one just because it offers some good distance into a support area overall. Number two for me would probably be NVIDIA, and then number three, AMD. But hey, who knows? Whichever one comes up first, that's probably the one that'll look at the closest in terms of declines, right? So that's stocks number three, semiconductor plays. Stock number four is going to be Uber. So Uber, we know, has been pulling back a lot since its most recent highs in around the mid $90 range. And I was telling you guys that Uber is potentially filling up one of my preferred patterns, the good old weekly uptrend into a breakout of the all-time highs, retest of what? Retest of prior big resistance, right? It was resistance back here. It was resistance here as well. So when it comes back down here, $80 down to roughly 77, that is probably an area that if you want to go shopping for some Uber. Why? Because the valuation is still good and the technicals still are fantastic. The bulls remain in full control, but we cannot get too greedy, going too close, right? We still want to play in or around the support range, preferably a little bit below it if we can, to offer ourselves some good distance and some good margin of safety for this very strong company. The expected move for this week is 81.45, this yellow line right there. Let's go shopping on Uber and say, can we find anything below 81.5? Well, let's pull up the options chain real quick, shall we? And we'll go shopping together. So Uber, to end the Friday session, you'll notice that down here, well, half of $80 should be about 40 cents. So at a first glance, the 0.5% rule is roughly at 80. Now, the 0.25% rule would be down here at 79. However, if Uber has another red day on the Monday session, maybe you'll be able to get the 78s or the 77s. I really want to get the high 70s. As a matter of fact, I actually have the 70s. I fired this one off myself with the Discord group just last week, right? You guys can see that right about here. I got these $78 short puts for 37 cents. So I was able to get the lower strike that I wanted. But in the event that, you know, some other people were interested too, those are the ones that I'll be looking for, right? High 70s would be fairly decent for me. I would not mind. Well, I'm already in it, but if I was not in it, that is the exact level that I would take. The proof is that I already took it, right? So high 70s for me would be money, and that's the one that I'd be looking for on Uber. That is stock number four. Stock number five, I'll give you two ones. These are a bit cheaper ones for smaller accounts that can't afford the big ones per se, and it's going to be SoFi again. I don't know how many times I've had SoFi on this list in the past month and a half. Seems to be like every single week. Why? Because it's holding a really good range right now. We know that support is down here at around the $12 to roughly $10 range, all the way down there, but the bulls have been playing some pretty good defense, but we can't get complacent and play too close to SoFi, you know, get that false sense of security, and then it just breaks down on us, and we would have preferred riding lower, right? So SoFi offers up some very good technical areas down here in the lower 12s, but also fundamentally, guys, the company in the $13 to $12 range is at a fairly manageable valuation, whether you measure by price to sales or the PEG ratio, which measures earnings towards future growth. Those are all the reasons why I like playing SoFi, and it is also fairly capital light too for 100 shares. Now, 12.71 is the expected move, so let's go shopping on SoFi and see, can we find something on SoFi below the expected move? Let's go shopping real quick together, shall we? So we can see that, well, if the expected move right now is 12.71, we want to be below that. So think 12.5, 12, 11.5, things like that, right? So the more aggressive one would be the 12.5s. It's slightly below the expected move. $12 is 0.5%, right? Half of 12 is 6. You can see that there's roughly 6 cents here to be had. However, if SoFi has another drop on the Monday session, or maybe even the Tuesday session, you might be able to find a bit more premium down here on the 12s. For me personally, if I did not have SoFi, which I already do, but if I was looking to possibly pick some up, maybe I would stagger them, right? Maybe one at 12.5, one at 12. Then if the market drops, at least I leave some DCA room if it does come down below 12 and I have to pick some up at 11. So this is one that you can kind of stagger your strikes in the event that you're doing multiple contracts. If you're not doing multiple contracts, being conservative with this strategy is always the better rule, more so than not. So I would probably just go with the 12s and call it a day. Unless you guys want to be more aggressive and go for the 12.5s, it is completely up to you. I would be fine with either or. And as I described earlier, it's really up to how aggressive the individual trader wants to be. But both of those are below the expected moves. The 12 is, however, a bit closer to the support range down there and would be the one that I would kind of lean into in the event that that's my style, right, of being a bit more conservative. And the other one that's a bit of a smaller one is Rocket Mortgage. Rocket Mortgage, for the same reasons, presenting some really nice areas of support down here, starting at roughly, 12 is the yellow line, roughly. The support really starts at about 11.75. You can see that right here. It's all the highs from 2022, 2023, and then it's all the support levels from 2024, right? $12 to $11. So Rocket Mortgage is always on my list. I won't give you guys the expected move. You guys are pros by now. You can find that on your own. But if I find Rocket Mortgage down here below 12 or at 12, I'll probably throw another contract. I've been playing it every single week for arguably the past month, and so far it's been going so very well. No assignments whatsoever. I usually benefit from the big red days right below the market, and by the Friday close, I'm fine, but I am also perfectly fine with being assigned and having to buy the shares down there. And with that being said, that is your top 5 options list, guys. Hopefully you enjoyed that. Now, as promised, we're going to get into the bonus plays. I'll be giving you guys 10 bonus plays, some for growth sectors, some for value sectors, and lastly, some for you guys that have really big accounts that can do the higher valued share price stock. So I'll be giving you guys a couple there as well, right? And now the reason that these are not in the top 5 are not because they're not as good, but sometimes they're just not ready, right? The support zones are a little bit too far away. They're ones that are on my watch list. If they come up, if they start off big red on Monday or Tuesday, I'll look into them, right? But right now, they're just not quite ready just yet, but they are on the back burner watch list. And if they do come up, you guys probably see me play them on a weekly basis in my account, right? So moving to bonus play number 1, we're going to go over the growth segment, right? So growth, we're going to start with Apple. I know some of you are saying Apple's not a growth stock anymore. I understand, but let's just put it there because it's also not a value stock like Procter & Gamble, right? They're not growing that slow. Well, I don't know. But anyways, Apple, I've been playing Apple for a few weeks in a row right now. Got assigned 2 Fridays ago and just got called away with covered calls last Friday. Very quick in and out for us. You can see that trade right about here on this weekly recap. Apple, we got called away. We made a nice $411 or $4.11 per share. Some people in my group had 1 contract. Some people had 5 contracts, right? It's scalable up or down depending on your account size. Very nice in and out on Apple. So Apple looking for the same, guys. If I can find 195 down to 187, preferably closer to the 190s, I'll be doing that. I won't be giving you guys the expected moves because it would just be too long, right? You guys are pros. You guys can do that on your own right now. I'll just give you the levels that I'd be interested in if I can find the strikes. For me, lower 190s on Apple, that would probably fire off a trade criteria for me. ANET is another one that probably fires off a trade criteria for me if I can find ANET below $80. Think 80 all the way down to roughly $70. The lower area down here, company has phenomenal growth. It does trade a little bit rich, but that's because it's growing really, really quickly, has some phenomenal net margins, high return on capital employed as well, extremely efficient business, and one that is loved in terms of networking in the data center niche. I think this company has a lot of growth ahead of it still, but as part of the whole data center AI semiconductor, somewhat skittishness that's been happening over the past 6 months, let's call it, it's come down tremendously. But if I find ANET on a big red day, Monday or Tuesday, it does meet my criteria. If I can find below 80 down to $70, I like that one too. The third one in the growth stock segment is going to be Affirm. Affirm finding very nice base of support down here, roughly 45 down to $40. I do want to give this one a chance. They had phenomenal earnings, which we did cover on the channel overall. Very, very, very strong fundamentals and currently not trading too bad in terms of forward expectations of the forward price to sales, right? Because their earnings are coming out of zero and they're kind of fluctuating a lot. The company's been doing good progress in improving gross margins, expanding their user base. They do not have a problem with debt overall or defaults overall, such as one of their competitors, shout out to Klarna, which has some problems with that, right? But overall, credit defaults stand at under 1%. I like playing this one. The earnings were fantastic for this company. So if I could find a firm lower $40 range on a weekly basis, I would not playing that one too. And that is pretty much the 3 for the growth category. And a special shout out to another one, Decker's Outdoor Brands, guys. Decker's, if I can find it down here, mid to low 90s. Think the low 90s, 93 down to $90. It doesn't have the best volatility, but it's been very weak lately. They had some pretty good earnings overall, except for they mentioned the word tariffs. and increased costs with their tariffs, and that was enough. But their brands have been growing well domestically and internationally as well. I think this one is worth a second look for a lot of people that are into this company down below here in the lower 90 range. So that is the 4 growth stocks I wanted to bring your guys' attention to. Now let's figure out the value stocks, right? So I'll give you guys 3 value stocks right now that I'll be looking at very closely if value is the type of thing I want to do. Chipotle. Now, some could argue that Chipotle is not a value stock, it's more of a growth stock. Yeah, but it's kind of food and beverage and quick service restaurants, right? And I kind of clump them up all together. They're more of a value trade for me than they are like a tech company, you know what I mean? So I lump them up in this area. Chipotle, guys, mid 40s for me. I would not mind. I know the next support range is all the way down here at 40, but I would not mind doing one contract of Chipotle down here in the mid 40s. Seems as though the Bulls have been playing some good defense here since the month of March, so like almost 2-3 months at this point. Mid 40s for me on Chipotle, not too bad. Fundamentals are still good despite them having lower same-store sales, right? They're coming off a very high growth period and now slowing down a little bit with that, discretionary spending coming down from consumers, but still a very resilient brand overall. Would not mind doing this one in the mid 40s. The second one will be Nike. Nike, only just because of price, right? We're getting prices, guys, that we haven't seen since 2016 to 2015. It is a heck of a recovery story. I'll agree with you. And Nike does not have the best volatility, but on the rare occasions where Monday and Tuesday I see a 1-2% drop on Nike and I can find it down here in the mid to low $50 range, I would not mind playing the wheel on Nike down there when we're looking at time machine prices from 2016 and 2015 overall. So that is it for Nike. And then the next one is going to be, lastly, for the value names, is going to be Pepsi. So Pepsi as well has been forming a nice base of support down here, 131 and about 126. I really like Pepsi in the mid 120s. This company has just gotten out of favor so far. It's a 4.33% dividend yield overall, coming into some of the lows that we have not seen since 2020. I do not mind playing this one, but I got to get some good distance. Pepsi does not have the best volatility, but if I can catch it down on a Monday or Tuesday, 2% for some which reason, and I can find some strikes down here, 126, 125. It has to have a big red day for that to happen. I would not mind giving this one a chance because it is weekly oversold. It's below several key long-term moving averages, such as the 200 weekly moving average, which Pepsi really has not gone much this far under since 2008 overall. Very high dividend yield. In the event you get assigned, at least you're collecting a good dividend. And overall, it's still a very solid company despite being out of favor in terms of sentiment right now from the market. Those are the 3 that I tend to look at on a weekly basis in terms of the value names. Now, for you guys with big accounts, I'll give you guys 3 plays that I'm looking for my own big account on a regular weekly basis. The first one is going to be a company that everybody knows, which is going to be Meta. So Meta, of course, it's a very high price stock, so not everybody can play this, but if I can ever find nice short puts here on Meta, 600 down to 560, that's an area that I like a lot. So if in the event that tech consolidates a bit early on in the week and we get a nice little come down on Meta here, I mean, it happened on Friday, right? It went down to 633. When it comes down here into the lower 600s, 630, 620, you can get some opportunities at the 600 to about 580 level. I would not mind playing Meta there. Why? We're just looking for a breakout retest, yeah? It's a big weekly upturn right now. There's a gap to be had right about there until 600. In the event we pull back for a few weeks, I would not mind playing Meta in this very juicy support range because the company has phenomenal fundamentals, and that's pretty much all you need to know. High margins, great fundamentals. Really is not affected that much by tariffs overall, unless you consider the recession scenario whereby companies pull back on advertising spending, yada, yada, yada. That's still, it's not going to happen this week, right? So if I find it this week overall, I would not mind playing Meta here. Now, moving on further, another company that I like to play with my big account is Lockheed Martin. Now, unfortunately, well, fortunately for them, but unfortunately for us, Lockheed Martin is now pulling up into resistance. However, such as the many times that has preceded this, if we pull back down again on Lockheed Martin, and I can find some strikes down here, 460 down to 440, phenomenal support for a very strong company. This green line right here is the 200 EMA. You can see how many times Lockheed Martin has tested it in the past 10, 12 years. Every time it does, it acts as support, horizontal support, a 5-year trend line, which is this yellow line right there. I would not mind playing LMT, and I have been playing LMT regularly every single week almost in my big account. Very strong company overall. And the last one is Berkshire. You guys know all this one too, right? Berkshire also establishing a very nice key level of support down here, 500 down to about 498. However, if we break, I'm looking for Berkshire here, guys. think the 480s, mid 480s to 480 flat. I would not mind. This is the breakout zone from earlier in 2024. It is the tariff fear lows as well. It is the 200 weekly EMA too. So a lot of daily EMA, a lot of confluence here, especially when looking at the weekly charts. You'd just be looking for some extended consolidation, and I would not mind being assigned some shares of Berkshire around the 50 weekly EMA, which is roughly 480, 475. Decent little area to be looking for Berkshire if you have a big account. And with that concluded, that wraps up all the top 5 options plays, which is more like top 8 options plays, because I gave you 3 semiconductor names and then 2 small ones, SoFi and Rocket Mortgage, and the 10-11 bonus plays as well. So hopefully you guys are able to get inspired from any of those plays. Maybe it gave you some ideas. Maybe it made you think of other stocks as well. So if you found any of this video interesting, I would appreciate it if you drop a like down below. Helps me grow the channel. Also consider subscribing if you're new. We do these every Sunday in preparation for the upcoming week. So hopefully I'll see you back in one of these in the future. And lastly, if you have any questions on the strategy, guys, please feel free to write to me down below. And I'm always going to be there to help you guys understand and master the wheel strategy, since I think it's one of the best in the markets. Very low time, right? You don't need to spend 8 hours in front of the chart. Just a little bit of homework on a Sunday evening, and then you have your plays set for the week, and you just go look shopping for them while not chasing the market to the upside, right? There's always some companies that are red, and there's always some companies close to support. So never chase the market, guys. Let the market come to you. So with that being said, guys, that's everything I had. In the event that you wanted to join a private trading and investing community where we specialize in not only this strategy, but many other strategies that you guys see me trade on the channel. This one, however, is the bulk of it. Here's just some of the trades, right? You can see that the wheel trades in the most recent weeks, they've all gone really well, whether we get assigned or not get assigned. And we even play some earnings trades on those as well. They've all gone really well overall. So can't complain. It's the bread and butter pretty much of the trading channel. If you guys want access to all of my trades where I trade the strategy live for you and I, alert them in the Discord essentially, you can consider joining our group down below with over 150 other members that have a lot of fun with me on a weekly basis, trading this strategy and many others. You get access to all my plays. You get access to our private morning live streams, which we do Monday to Friday before the open and during the open, where I trade live and answer all your questions about your stocks or options, your long-term investment portfolios. And if you can't be there, they're always recorded, so feel free to watch after. You can ask me all your questions in real time as well in our chat rooms, and almost very fast to answer and give you guys very detailed answers. Not only yes or no answers, I give you guys paragraphs of depths of explanations for whichever trading strategies you guys want to have questions on or long-term portfolios. And also you get access to all my watch lists. So this options watch list right here, where I look and shop for all my plays on over 200 different companies. You can copy paste all my watch lists. You copy paste all my charts as well for free, all the support, all the resistance levels, and anytime you guys see any annotations for fundamentals on any of these charts as well, you copy paste all my watch lists, all my charts with 2 clicks of a button. It takes 30 seconds, just an added bonus to or for our Discord members. If any of that interests you, as I said, the link is down below in the video description. Hopefully I see you in our community soon, and if not, I guess I'll see you guys back on the channel. That's it for me. Take care. Have a beautiful week in the markets. Love you guys. Don't be greedy. Let the market come to you, and peace.